The stock market is red. Dow is down 1.5%, that is 543 points. S&P is down 1.84%, about 85 points. And Nasdaq is down 2.6% with 386 points down. But that is not why we are here. We are here because Microsoft is going to make an acquisition of Activision Blizzard for $68.7 billion. And that is the largest acquisition Microsoft has done in its entire history. Now, because of that news, Activision stocks were up 25.88% and Microsoft stock was down about 1%. Microsoft will pay about $95 per share for a cash-only deal. Activision CEO Bobby Kotick will leave the company after this deal closes. And the entire Activision team is going to report to Phil Spencer, who is the head of Microsoft Gaming. This acquisition is set to close in 2023. However, there are certain risks that also plague this deal. One of those will be the regulatory risk, which of course the regulators will take a very keen interest in. So there you go. That was a quick summary of Microsoft's acquisition of Activision Blizzard. If you would like to stick around, here's what we are going to cover additionally in this video. We are going to take a look at Microsoft's revenue chart, why Microsoft is making this change. We are going to look at Activision's balance sheet, and we are going to look at the price action for Activision and Microsoft. So if that is something you're interested in, keep watching and let's get this rolling. Let's see how the Activision deal is going to set within the revenue streams of Microsoft. Looking at their revenue stream from 2021, the server products and cloud services accounts for 31.3%. The office products account for 23.7%. Next up is the Windows, and next up is the gaming. So gaming comes at number 4th in the revenue stream for Microsoft. So it is a big driver in Microsoft's revenue stream. As we heard from Satya Nadella in the last quarterly earnings that they are making a big push in the Metaverse. So as these gaming companies like Xbox and PlayStation and other gaming consoles, they make a push towards the cloud services where you can play games by just as a service rather than buying these individual equipments, content becomes a king. Now backend like server, cloud services, all these others, they play an important role, but content remains the king. Just like Netflix spends a lot of money in creating content for the viewers. So similar to that, Activision's acquisition by Microsoft gives Microsoft access to a lot of these big names like Call of Duty, Overwatch, Diablo, etc. Satya Nadella is focusing on gaming a lot because he goes to say that gaming has been key to Microsoft since our earliest days as company. Today it is the largest and fastest growing form of entertainment, and as the digital and physical worlds come together, it will play a critical role in the development of Metaverse platform. So as you can see, Microsoft is really pushing the boundaries in the Metaverse. Now, if you have not seen my video on the top 7 Metaverse stocks, check it out right here. It is clear from their intent that they do want to make a big push into Metaverse and become a dominant player in that industry. Now, having said that, Activision also comes with a lot of baggages because recently Activision stocks were down because of a lot of sexual harassment and other cases. So this is also going to be a major risk, especially when you are having a completely two different company culture altogether. Having said that, Activision still is a solid company. Because of all these lawsuits, in 1 year, Activision is down 27.34%. So their 52-week range has been between $56 and $104. Their PE forward ratio is 17.24, so it is not that bad as compared to some of these other multiples for the growth companies. Looking at their financial, and this is the most exciting part in the section, in 1 year they brought in about $8 billion and their gross profit was $5.8 billion. And their net income was $2.197 billion. So that this company is bringing a lot of revenue in there. Looking at their balance sheet, and their total current assets as of September 2021 was $11 billion, $23.97 billion in long-term assets. And their total current liability is $2 billion and long-term liability is 7 billion. So basically, this company has way more asset than its liabilities. So looking at the price action for ATVI, as you can see, this stock back last year, it was trading in high 90s. And since these different cases that have come around, so the stock has been just falling down. Right now, this stock is below its 100-day, 200-day, and 300-day moving average. So it was down as low as $56 back in December. So the stock had found some support and was trading between $60 and $70 in the range. So right after today's news, we saw this big bump all the way up to $87 at the close of the business today. On the RSI, it is at 80, so it's definitely overshot. Right now, Microsoft is paying $95 for the stock. In the short term, I do expect the stock price to come down because the deal will not close for the next year and a half. This valuation for Activision at the current levels may not work. And also the second risk that we are talking about is the regulatory risk, which we cannot discount. Microsoft, on the other hand, actually had a red day for Microsoft. It was down about 1%. RSI is 3340, closer to oversold territory. Let me know in the comments if you own Activision or Microsoft and what are your thoughts about this acquisition. Do you agree or do you disagree? If you found any value out of today's video, don't forget to hit the like, click on subscribe and ring the bell notification. I will see you next time, Investor Family, but don't forget to invest for tomorrow.